Hello, good morning, ladies and gentlemen. Well done, guys, and let's kickstart the session this morning. So, I will first of all need you to give me a feedback if you can see my screen and you can hear my voice by typing hi in the comment section so we can get this started. So, if you can see my screen and you can hear my voice, kindly type in hi in the comment section. Let's get this started. So let's see what we have here in the comment section. Okay, 398, good morning to you. Thank you. All right, 446, I see you. Vivi, how are you doing this morning? Raven Crow, good morning to you. Hey Carrie, good morning. Glad to have you around this morning. All right, so I'm so excited to welcome you to another promising session on the Extra and Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host as we take a technical dissection of the current market structure so that we can anticipate, so that we can identify trading opportunities lining up for us today during the New York session. And for those who are joining us for the first time, I'm very excited to have you around with us. You're welcome on board. And what we simply do here is to analyze the financial market from a technical standpoint, identify trading opportunity, and position ourselves in such a way that we can catch these opportunities during the New York session. So we normally do this on a daily basis in anticipation of the New York session. So we normally start 10 a.m. UTC on a daily basis. So I implore you to stay tuned in and continue to be with us throughout the course of the week. And initially it might look a little bit complicated, but one thing I'll advise you is this, that with time you get to understand how this works. Just stay tuned and continue to be with us on a daily basis, and with time you will be able to use these informations you have gathered here to make your individual decision on whatever pairs that we talked about during the live session. So once again, I welcome you guys, and let's dive in to the business for today. Well, yesterday was a very big one for us in the market, as from a fundamental perspective, we were anticipating the FOMC, and we were also anticipating the interest rate decision and the FOMC press conference. And what we saw here was that the key moment was the rate hike, which happened to be a 25 basis point as against the fear of the 50 basis point. Let me put that in quote. And now we have a rate of 5%, which falls within expectation actually. And in that regard, we saw an immediate reaction in the market where the dollar dropped significantly to the downside. And right now, the market appears to be going through a phase of normalcy right now, as I can assure you that we have tradable setups going into the New York session today. And for today, we do not have any macroeconomic event that relates to the pairs that we are monitoring. Okay, I think we have something on the GBP, which is coming up in an hour or two. That is the Bank of England minutes. We have the Bank of England asset purchase facility. We also have the interest rate decision for the UK economy to coming up today too as well. And look at what we have here. So the previous rate is 4%, so we're expecting another 25 basis point increase. But let's see what happens in the next 1 hour, and we shall be looking at how the market is going to be anticipating this event too as well. We have the MPC vote rate hike, MPC vote rate unchanged, and then to top it on, we have the monetary policy summary all coming up in an hour or two from now. So these are high impact events everyone will be looking forward to, and as usual, we shall be taking a technical dissection of the current market structure so that we can identify trading opportunities and at the same time position ourselves in such a way that we can catch these opportunities. So with that being said, here we shall be diving right into the first commodity for today, which is the US oil as usual. Well, on the US oil, it has been a profitable week for us on the US oil so far, as we have been buying this commodity ever since we identified that buy pressure resumed at around the $65 area, which also happens to be the lowest point price action had been since December 2021, and also that area is a strong support line of the descending channel we identified on the higher time frame. So we shall be looking at that in a moment for those who were not part of our previous live session. So the identification of the buy pressure here on Monday was quite a good signal that price action will be moving to the upside. But we needed a confirmation. As you can see here, during the first 24 hours, we saw our price action was trading between the channel around the $67.50 level, which happened to be the resistance point for the week that was on Monday. Then we had the support line of the week sharing a confluence with that key level at the $65 area. Now, you all know what we look out for whenever we have this kind of simple setup. We need price action to either break out or break down of that channel for trading opportunity. And this was exactly what happened on Tuesday here, after we saw the breakout of the $67.50 level, triggering our buy position. And it was at this point we had our first buy position for the week. Then we also had opportunities of adding more positions at breakouts of key structures, which we actually identified during the live session. Key structures like the $68.50 level. Then during the course of yesterday's live session too as well, we also identified this channel between the $69.40 area and the $69 area, which falls right around that bullish trend line that has been supporting this bullish momentum since the beginning of the week. So we added another position here, making it the third position for the week. And during the early hours of today, we also added another buy position at the breakout retest of the $70 area. And for those who have been part of this profitable journey since the beginning of this week, well done to you guys. Kudos to you for being on standby, as you will currently be running with over 500 to 600 pips in profit if you are taking all the 4 positions that we have currently in this market. And you all know what we do whenever we already have a significant advantage on the market structure. We want to be securing our positions by moving our stop loss accordingly to protect whatever profit we had made so far, so that we don't lose out on whatever we have made in case we have a sudden pullback that will happen in this market. So in this case right here, what we want to be doing is to move our stop loss to somewhere just right below the $69.85 level, so that we can give room for price action to breathe at this area, probably in anticipation of a trend continuation to the upside. So now that we have moved our stop loss accordingly to lock in some profit, what is our next line of action going into the New York session today? What do we want to be looking forward to? What do we want to be seeing? And for those who had missed out on this opportunity, are we going to be having another chance to be able to join this potential rally to the upside, or are we likely going to be seeing a bearish momentum anytime soon? As you all know, with the buy momentum we have been enjoying since the beginning of the week, and looking at the current market structure, a retracement phase seems overdue at this particular point in time. So let's see what is going on the higher time frame, so that we can have a better perspective of what is happening here, and so that we can use whatever information we have to make a decision for today. So in that regard, I want us to scale up into the 4 hours time frame. That is where we are going to be focusing on today. And on the 4 hours time frame, we shared this during the live session on Monday, where we identified a bearish momentum since the beginning of this month. And to further emphasize the strength of the sellers in this particular market, you can see that we have price action transition into a descending channel, which was identified after connecting the series of lower highs which we have here and the series of lower lows which we have at this point. And at the beginning of the week, we saw our price action was trading around the support line of that descending channel which I was talking about earlier on the 1 hour time frame, which definitely also shares a confluence with that $65 level, which is the lowest point price has ever been since the December 2021. And look at what happened since the beginning of the week. We saw our price action continue to find higher highs, respecting that bullish trend line that I identified earlier on the 1 hour time frame. So what this simply tells us is that price action is still respecting that descending channel, trading within that structure, as we saw buy pressure resume here, bringing price back into the resistant line of that descending channel. Now, with the current situation we have right now, the next question we want to be asking is this: will the descending channel here be respected one more time in such a way that price will find price selling pressure below the structure to incite another wave to the downside? That is one possible scenario we are going to be looking forward to, which is also going to be an expectation we shall be leaning towards because of the long-term bearish momentum in this market, and for the fact that price is currently trading around that resistant line of that descending channel. Then another possible option that could happen here is price action breaking out of the resistant line to give us a clue that the resistant line is no longer strong enough to hold selling momentum. Then a breakout retest of that structure definitely will be giving us an opportunity to buy the US oil for today. So now, with the situation we have right now, we want to be looking at how price action is currently reacting to that trend line, which also falls just right around that $70 level. Remember that key important structure that was broken during the course of last week's trading session. And since the breakdown of that $70 level last week, you will see that buyers have been finding it difficult to break out of that structure, as every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. You can see what happened around this area. On Friday, price was even not able to get into that structure. The same thing also happened on Tuesday here. Price was unable to get into the structure, but as soon as price got into the structure yesterday during the live session, we saw a sharp rejection of that structure where the candle there closed in the form of a shooting star pattern. And from a technical standpoint, a shooting star is a signal that sellers are still very, very strong in this market. So we saw the sharp rejection here, and since then price is yet to find a new high at this particular point in time. And one thing we have noticed here in the last 18 hours in this market is the fact that price has been trading between the $71 area and the $70 area, to give us a clue that there is an indecision in this market right now, as participants are not sure of where price action is likely going to be going as we head into the New York session today. Now, you all know what we look out for whenever we have this kind of simple setup. We definitely want to be seeing a breakout or breakdown of that channel for a signal of where price action will be going. So we have a resistant line right now at the $71 area, a strong psychological area where we need a breakout of that structure to give us a clue that a bullish momentum is gradually coming in this market. However, if the support line of this channel, which falls around the $70 area, remember the structure was broken during the course of last week's trading session, where from a technical theoretical perspective, a breakdown of a significant structure here has a tendency of price coming back to retest that structure, selling pressure below that level to incite another wave of bearish momentum to the downside. So if a breakdown of the $70 area happens, followed by selling pressure just right below that structure, definitely we'll have no choice than to start thinking of selling the US oil. So with the information we have gathered here on the 4 hours time frame, I'm very sure you are well equipped in such a way that you will be able to use this information to make a decision on our lower time frame. So in that regard, let's scale back down into the 1 hour time frame. Let's see how price action has been reacting to the $70 area since the beginning of today. Now scaling back down into the 1 hour time frame, remember we had the resistance point of that descending channel we identified on the 4 hours time frame. So I will be zooming right into that structure that we looked at on the 4 hours time frame. So look at what we have here. So this is above the $70 area. This is the channel we identified on the 4 hours time frame. As you can see, we have the resistance line here. This was the sharp rejection during the later part of the New York session. Price is unable to find a new high here. As you can see, now we have a lower high at this particular point in time. And if you zoom out a little further, you will see that price action appears to be transitioning into a reversal pattern in the form of a double top structure. So we have the first touch here. Price action came back into the $70 area. Price was unable to break the previous high. Price comes back into the $70 area, and what do you think you can see here? You can see a potential reversal pattern in the form of a double top structure. And you all know what we look out for whenever we identify such a structure. We want to be identifying a neckline, which definitely we want to be using as a yardstick for trading activity for today. So we have the neckline coincidentally falling just along that $70 area. Remember the importance of that structure. Now what we want to be seeing to make this reversal pattern mature is price action breaking down that neckline area, setting pressure below that structure to give us that beautiful confirmation to join a trend continuation to the downside. And remember, all our buy positions here, we have moved our stop loss to secure this current position as we wait out to see how price action will be reacting to the $70 area to decide if we are going to be selling. And if a breakdown of the $70 area happens, it will have happened that the resistance line of that descending channel has been broken back to the downside, where obviously we are back into the sell territory just right below the $70 area. Then we could be looking forward to more selling opportunities below the structure. And one other thing that will emphasize the strength of the potential reversal pattern here, remember at the beginning of the week we have this bullish trend line which has been supporting the bullish momentum on this chart since the beginning of the week. And remember, I told you that this is going to be our yardstick for trading activity for this week on the US oil. And one thing I said here is that if price action continues to trade above the bullish trend line, we shall feel comfortable in our buy position and continue to look out for more opportunities to add more buy position to our existing trade. But if it so happens that the bullish trend line here is broken to the downside, then definitely we might likely be seeing a momentum shift anytime soon. And if you look at what has been happening on this chart in the last 9 to 10 hours now, you will see that the bullish trend line appeared to have been broken to the downside. In fact, we have a retest of structure followed by an engulfing bearish candle, bringing price back into that potential neckline area of that reversal pattern we identified at the $70 level. Now, with the situation of things are looking more bearish at this particular point in time, where you could have your sell stop order below the $70 area here, hoping that price action will strike through, trigger our sell position, and if we continue to see sell pressure resume below the structure on our lower time frame, definitely we want to be open to add more position to our existing trade. And in fact, if the sell momentum continues, the current market structure has a tendency of giving us multiple entries, as we have structures like the $69.40, $69 zone area. Breakdown retest of that structure will definitely be welcoming additional position. We also have the $68.50 level breakdown retest of structure, adding more position. $67.50 level, another area we can be looking at to add more position to our existing trade on the US oil. So this is what we shall be looking forward to sell the US oil for today. I'm leaning towards a sell momentum on the US oil, so we shall be anticipating that breakdown of structure. So we have a sell stop order sitting just right below that neckline so that it can trigger our sell position in this market. Now, as usual, we always try to ensure that we have the other perspective too as well. The market is very, very fluid. Anything could actually happen, and for us to be profitable in the market, we want to be as fluid as possible. That is, having the ability to be able to change stance immediately we start seeing price action doing the opposite of what our expectations are. Now, with the situation we have here, despite the fact that we are considering selling the US oil for today, we cannot ignore the potentials of the buyers in this particular market. Obviously, since the beginning of this week, it has been bullish, as there is still a chance that buyers could still take over this market. So if a bullish momentum is likely going to be happening in this market, well, what do we want to be seeing to be part of that bullish momentum? Well, for me at this particular point in time, I will be considering that the $71 area should be an area we should be focusing on to buy the US oil. Now, with the situation here and seeing what has been happening since the New York session yesterday, where selling pressure has resumed around that area, definitely we want to be seeing price action take out all the sell positions here by breaking out of that $71 area, giving us a beautiful signal for an opportunity to buy the US oil. And if that is going to be happening, well, we want to be seeing buy pressure resume around that area, giving us confirmation of liquidity for buying power around that area to join that trend continuation to the upside. But personally, this is not what I'm looking forward to, but what I'm simply saying here is that if it so happens that price moves in that direction, we want to be on standby so that we can catch that opportunity when it happens. On this one, I'm a bearish expectation on this one for today, but if it happens that price action breaks out of the $71 area, we want to be on standby to catch that move as well. So these are my views here on the US oil for today. If you have questions, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. You may also want to screenshot my screen so that you can use it as a reference point when you're about to make your independent or individual decision on this commodity. So that is that on the US oil for today, and I will be moving on to the next option. Trust me, I will be checking the comment section from time to time to see if there are any questions for me. So the next option we are going to be looking at this morning is the US tech. And on the US tech, we have been profitable so far this week anyways. Price action actually hit our TP target before we started seeing the sell pressure resume in this market. And remember, prior to the live session yesterday, we had 3 positions running. Before the live session yesterday, we had our first position triggered, had the breakout of the 12,550. Then we had our second position at the breakout of the 12,620. Then we had a third position here prior to the live session. And during the live session yesterday, we said we are going to be adding more position if price action breaks out, retest the 12,750. And you can see what happened yesterday. After the breakout of the 12,750, price action moved over 200 pips in our favor before the sharp rejection happened, which was a result of the immediate reaction from the FOMC event yesterday. And I hope you are part of that bullish momentum to the upside. For those who had bought the US tech since the beginning of this week, obviously you will definitely be in profit of roughly about 300-400 pips thereabout on this one. However, personally, I missed out on the sell position as I was never expecting that price action will drop to the downside on that one. But let's see what to look out for as we head into the New York session today on the US tech. Now that we have a breakdown of a structure, remember we had the bullish trend line on this chart, which was supposed to be guiding our bullish momentum for this week. And with the final breakdown of that structure during the course of yesterday's trading session, a structure which also shares a confluence with this line here had a $12,675 level. So we are at a critical point in this market right now, and we all know from a technical standpoint, whenever price action breaks down a significant structure like this, we expect at one point in time price is likely going to come back, do a retest of that structure in anticipation of a trend continuation to the downside. Now we have a couple of structures around this area we want to be looking at price action doing a retest of. The first one is the bullish trend line here, which shares a confluence with the 12,750, and we also have the 12,675, which was broken during the course of yesterday. So between the 12,750 and the 12,675 should be considered a strong sell zone in this particular market. So whatever we are looking forward to within the structure, within the zone, should be more of a reversal pattern in anticipation of price action going to the downside. But before I go into the details here, I would like us to have an holistic view of what is going on in this market before we make a final decision on the US tech. Now, in order to do this, we want to be scaling up into a much more higher time frame, something like the daily time frame. Let's see what is going on there. If the current structure here will be supporting the perspective of selling the US tech for today. Now, looking at the structure, I want to take us to as far back as last year. As you can see on this chart, price action has been bearish on a long-term perspective. And to further emphasize the strength of the sellers in this particular market, we connected a series of lower highs, and that gave us this beautiful resultant bearish trend line that you can see on your screen right now. However, in as much as price has been finding lower highs in this market, something interesting happened here. As we see, despite the fact that we are seeing lower highs, we never saw lower lows to further buttress the momentum of the sellers in this market. As you can see here, as soon as during the month of June last year, as soon as price got into the 11,000 area, we started seeing buy pressure resume from that area, hereby negating all attempt by the sellers to break down that structure. And in fact, to further emphasize the strength of the buyers around this area, you can see that these all activities for buying pressure lasted over 6 to 7 months. So throughout the second half of last year, we were seeing buy pressure resume around the $11,000 area. And at the beginning of this year, we saw our price action continuing to the upside, breakout of the $11,000 level, finally doing a breakout of that bearish trend line to signal the bearish trend line is no longer strong enough to hold that bearish momentum. And to further buttress the strength of the buyers in this market since the beginning of this year, we connected the series of lower highs, the series of higher lows in this market, and we saw this bullish trend line figured out. So this trend line has been supporting this bullish momentum, and not until mid-month of February we saw the breakdown of that bullish trend line for the first time this year. And in fact, prior to the breakdown of that structure, we saw how sellers rejected bullish attempts around the 12,900. And if we go to the left hand side, you will see how the 12,900 area has been a strong selling niche in this market. And look at what happened during the New York session yesterday. We saw price action come into that structure, but what happened when price came there? We saw a sharp rejection of that area, hereby making that candle to close in the form of a shooting star candle. And from a technical standpoint, this candle indicates the presence of sellers in this particular market. So now that price comes back into the 12,900 level, we saw another sell pressure resume from that area. And from what we saw in the past here, you agree with me that this area has a strong memory for selling power. And with the situation of things and looking at what has been happening in the last 3 days in this market, you will see that it appears that we are beginning to see our price action might likely transition into a reversal pattern to incite another sell momentum to the upside. And if we look at the structure from a technical standpoint, let me zoom out and see, since the breakout of that bearish trend line that we identified earlier here, price is yet to come back and retest that structure. Are we likely going to see a retest of that structure happen if the reversal pattern we just identified here comes back into retesting the trend line one more time in anticipation of another wave of bullish momentum? Well, that will be that will be determined later on in the future. But at this particular point in time, what we want to be focusing on is what is really going on around the $12,600 and the $12,700 area, so that we can make a decision for today. And in order to do this, we want to be scaling down to a much more lower time frame, like the 1 hour time frame, to make a decision for today. So I will be scaling back down into the 1 hour time frame, and let's go back down into the 1 hour time frame. So here we are on the 1 hour time frame. Now, with the situation of things here, like we already declared at the beginning of the analysis on the US tech here, we saw that since the beginning of the week, price action had been bullish after the appearance of buy pressure around the 12,410. And to further emphasize this, we have a bullish trend line which was finally broken during the course of yesterday's trading session. And for me at this point, I want to be seeing the bullish momentum we are seeing currently as a retracement phase, as we are waiting for the culmination of this retracement phase in anticipation of another wave of bearish momentum to the downside. And for us to be able to project where this retracement phase might end, we need our Fibonacci retracement tool, where we shall be aiming at our golden zone area, which falls just right around the 50 and the 78.6% of that previous impulse leg. So I will be drawing it out, identifying that $78.50 level, 78% and the 50% retracement of that previous impulse leg. So we have something around this area. So this area should be a potential sell window. Okay. And for those who had bought yesterday, joining that retracement phase, well, you might want to have your TP target anywhere around this area. So for those who bought the US tech prior to the session, you want to have your TP target anywhere between the 12,750 and the 12,850 area. So I will be deleting the retracement tool right now, and let's focus on what is going on here. So we are at a critical point in this market where we have two breakdowns of structure. The first one is the 12,675 and the bullish trend line here, where I said from a theoretical standpoint, we expect that after a breakdown of structure, price is likely going to come back and do a retest of structure. So we either have a retest of the 12,675 or the retest of the 12,750. But one important structure we want to be looking out for around this area is a reversal pattern. We want to see something like a double top structure, head and shoulder pattern, rising wedge, whatever reversal pattern around this area on our lower time frame, probably breakdown retest of structure, after which we want to be joining that decline to the downside. So for now, we have not yet made any decision here. We are still going to hold on, wait for a reversal pattern to happen right below the 12,750 for us to be able to join that bearish momentum to the downside. So on the US tech for today, I'm looking forward to selling opportunities on this chart, and we can ride that move all the way to the downside. So let's be on standby to catch whatever opportunity comes in on the US tech for today. If you have questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair here. Okay, but before I do that, there is a question here that what if price action does not go that far into that sell window? That is, if it does not go as far as 12,750 or even go to as far as the 12,850 area, but instead it start finding lower lows here, we would have missed out on that opportunity in that regard. But in order not to miss this kind of opportunity here, I want us to scale down to a much lower time frame, like the 15 minutes time frame. Let's acknowledge the buy pressure that has been happening here since the later part of the New York session yesterday. Identify the higher lows and use that trend line as a yardstick for our trading activity for today. So this trend line here will simply be useful if price does not go as far as hitting our potential sell window that we identified earlier. So we have a structure here. If we connect the series of lower highs here, we have something like this, and we shall be using that to guide trading activity So let me do some readjustment here so that it can fit into what is going on here. So I will be extending this out a little bit, so we have something like this. So this trend line has been supporting some bullish momentum, which for me, I think is more or less a retracement phase at this particular point in time. So one thing we want to be seeing to sell if price action does not go to as far as the 12,750 is to see a breakdown of this trend line, and then we wait for selling pressure to happen below the structure. It could come in the form of a retest of either the trend line or the 12,675 in anticipation of another wave to the downside, and a further breakdown of the 12,620 will definitely be welcoming additional position to our existing trade. So these are the things we shall be looking forward to on the US tech for today. So I hope you screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision on the US tech. So on this note, I will be moving on to the next pair, which is going to be the GBPUSD. Now on the GBPUSD, what has been happening on this chart since the beginning of the week? Let me delete some of this so that we can have a clean chart here. So I'll delete this. All right. Okay. I'll delete this one too as well. Okay. All right. So let's look at what has been happening here since the beginning of the week. Now, looking at the GBPUSD chart here, it is quite obvious that price action has been choppy before we begin to see some bullish traction begin in the last 24 hours. So the week started at around the 1.21700 level, which happened to be the support line for the week, and we have the resistance line around the 1.22100 area. And remember, we had this consolidation phase happen just around that 1.2200 level, which happens to be a strong supply zone in this market. Remember, we identified that structure on our daily time frame, and we shall be looking at that in a moment. But let's quickly run through how the week went by for us on the GBPUSD. So when we look out, when we see this kind of structure here, we definitely want to be seeing a breakout or breakdown of that channel for a trading opportunity, and this was exactly what happened that same Monday, just a couple of hours after our live session that day. We saw price action breakout retest the 1.22100 level to trigger our buy position, and that was our first buy position for the week, and we continue to ride the move all the way to the upside, where we also added more positions at the breakout of the 1.22450. And in fact, on that first two positions, we were able to make, I think, over 100 pips before the sell pressure resumed in that market. And we saw the situation happen here during the live session on Tuesday. We identified this breakdown of structure where we saw price action break down both this trend line and slice through the 1.22450 with an engulfing bearish candle. And one thing I told us on Tuesday is that we want to see a retest of structure in order to join this trend continuation to the downside. We were also part of that move as we rode the move, making about 70 to 80 pips thereabout on that same move here. Then on Wednesday, we were also part of the buy position here, where we saw, I told us on Tuesday that as soon as price gets into the 1.220 level, we want to see how price action will be reacting to that structure to decide what our next line of action will be. And if price action finds buy pressure, definitely that bullish trend line shall be our guide for that bullish momentum to the upside, which we were part of as well. And we rode about how many pips was that? Price moved about 85 pips in our favor before the situation happened on Wednesday yesterday. And during the live session yesterday, if you remember vividly what I talked about here, as soon as price got into that structure at the 1.22850, let me extend this out a little bit so that we can see things more clearly here. So as soon as price got into that 1.22850 level, we started seeing selling pressure around that area. And I told us all yesterday that we are at a critical point now we are within the territory of the sellers, where we need to be very, very careful of just jumping into any buy position. As we can see here, at the beginning of this week, we saw selling pressure just right around the 1.22850, and there is a tendency that price action could evolve into another sell pressure around this area. So in order to have a better perspective into what is going on here, we scale down to a much more lower time frame. I think we went on to the 15 minutes time frame, where we identified the simple channel. Hold on a second, let me show you. So we identified this channel here yesterday between the 1.22900 level. This is the channel. So we had the support line of the channel here at the 1.22800 level, and the resistance line of that channel at the 1.22900 area. And I told us all that the only way we can be selling the GBPUSD is to see price action break down the 1.2280 level, which happens to be the neckline of this potential reversal pattern that we identified yesterday, and we saw the breakdown retest of that structure to rather move all the way to the downside. And if you are part of that move, at least you would have made about 50-60 pips thereabout before this bullish traction began during the New York session and prior to the FOMC yesterday. So this was the situation we have right here, and we had some reversal pattern around this area where the 1.2245 happened to be the neckline. I'm not sure if you took advantage of that opportunity, but it's okay. And right now that we're heading into the New York session today, what is going to be our plans, and how do we intend to trade the GBPUSD for today? Now, one thing I want to do first of all is to readjust this trend line so that it can fit into the current market structure, which I just did right now. And let's scale back up into the 1 hour time frame to see how to take advantage of a trading opportunity in this market. Now, looking at the 1 hour time frame and going as far as last week Wednesday, obviously it's quite significant that price action has been bullish in the last 8 days. And to further emphasize the strength of the buyers in this market, we have this beautiful bullish trend line figured out after connecting the series of higher lows, and price has consistently respected that trend line. And we are at a situation here where we have been seeing some selling pressure resume just right around the 1.23 450 level. Let's identify that area. Let's acknowledge that area here. So we have the 1.2, hold on a second, 1.23 450. Let me label that area. So 1.23 450, please at the top right hand side of the screen. And what can you see here? Since yesterday we have been witnessing selling pressure resume from that area. So what this simply means is that sellers are strong around that area. So is the sell pressure here going to incite a sell-off in this market? Well, for those who are still in a buy position in this market, first of all, you want to ensure that you have moved your stop loss accordingly to lock in some profit, as the sell pressure here could probably lead into a sell-off in this market. And one thing I want to be seeing for me to sell the GBPUSD for today is to see price action break down this bullish trend line, at least for the first time. And I'll be extending this key level further to the future. So we have the 1.22850, which was initially a selling zone at the beginning of the week. I want to see price action break down both the 1.22850 level and that bullish trend line to give me a signal of a sell-off in this market. So we want to see something like this: breakdown of structure, selling pressure right below on our lower time frame, then we could join that decline to the downside. This is what I want to be seeing on this market, on this chart, for us to be selling the GBPUSD today. So the key level for selling pressure in this market right now is at a 1.22850 level. So I implore you to map that out on your chart, looking out for selling opportunities right below that structure, as price will have broken down the bullish trend line to negate the possibilities of that trend line holding any bullish momentum going forward. And one thing I will advise you to do is that as soon as the breakdown happens, you want to scale down to a much more lower time frame to look out for selling pressure right below that structure to confirm and give you that confidence to join that selling opportunity in this market. Now, looking out for buying opportunity in this market, considering the long-term bullish momentum here, as obviously price has been on the bullish momentum, higher highs and higher lows in the last 8 days. Well, I would need a confirmation here, despite considering the sell pressure we have been witnessing here in the last 12 hours. I would need price action to take out all the sell positions here by breaking out of that structure to the upside, by pressure above that level to give me that confidence that buyers are still very, very strong in this market. So that is what I will be looking forward to buy the GBPUSD at this juncture. So if you have any questions regarding what I just said here, feel free to drop your enquiries in the comment section. So I will be moving on to the next pair right now, and that is the XAUUSD. On the XAUUSD, it has been quite choppy here, but we had some good moments too, as well as we had this sell opportunity taken advantage of on Tuesday, as we saw here. So since the beginning of the week, we saw our price action was trapped between the 1,990, which happened to be the resistance point for the week there, and then we had the support line for the week at the 1,970. And we also, to further buttress this current structure here, we saw a reversal pattern in the form of a head and shoulder pattern. We have the left shoulder, the head, and then we have the right shoulder here. And you all know what we do whenever we have this kind of reversal pattern. We want to be identifying a neckline which coincidentally is situated at exactly the support line of that structure since the beginning of the week. And to further confirm the validity of this reversal pattern, we need price action to break down, retest that neckline area, the 1,970, to confirm this reversal pattern. And that was exactly what happened, and we were able to ride the move all the way to the downside, giving us about 350 pips profit in just only one single position. And then we had multiple entries as we had more positions at the breakdown of the 1,960. So for this week so far, we have been profitable on the XAUUSD. And during the live session yesterday, I also identified the setup here where we saw this flat channel figured out at this point, as we saw a consolidation phase here. And I told you that this is in anticipation of the macroeconomic event coming up yesterday, as participants were looking forward to see how price will react to that structure. And I shared this on my, I think I gave this up on a more cleaner chart here where we saw the consolidation phase here. Hold on a second, let me show you. I want to zoom in. So we had this channel here during our live session yesterday, where I told us all that we have a consolidation phase here, and obviously what we look out for is either a breakout of structure or a breakdown of structure for trading opportunity. But what happened here was a breakout of the structure during the New York session. I think 3 hours into the New York session, we saw the breakout of the 1,945 level, and in fact price action moved significantly in our favor to hit the maximum TP target situated at 1,976 with over 300 pips on that move. And for those who have been part of that trade, well done, and kudos to you for being on standby to have caught that move. So right now, if you are still in that trade, it's okay, but I will be advising you to move your stop loss accordingly to secure that position, as there is a high chance that selling momentum could come in anytime soon. And the reason why I said a sell momentum could be coming in anytime soon is simply because of the structure that we have here. Remember, at the beginning of this week, we saw how the 1,985 level had been a strong selling niche in this market, though we had a breakout of that structure here on Monday, but price action came back, dropped below that level, and since it dropped below the 1,985, we have been seeing selling pressure just below that structure to further emphasize the strength of the sellers at this particular point in time. And with that situation figured out here and price action coming back into that structure, as you can see here during the early hours of today, we can see that price is back into that sell window just within the 1985 and the 1976 here. And if you see what happened during the early hours here, you saw how the couple of candles here sharply rejected the 1985 and with the candle evolving into a shooting star candle, which from a technical standpoint is an indicator of a selling presence in this particular market. So with this situation here at this point, I'm of the opinion that we might be seeing selling pressure continue again for today, and not only if price action breaks out of the 1985 that we can buy at that point, but if that does not happen and the sell pressure continues, then we want to be having our sell stop order just below the 1976 to join this trend continuation to the downside. And to further help us identify a trading opportunity for today, I was able to connect the series of higher lows here to give us this bullish trend line that you can see on your screen right now, which I will be calling a temporary one just because of the situation that we have here. And if price action breaks down the bullish trend line, selling pressure below the 1986, we want to be having a sell position on the XAUUSD. And the current setup here for the sell position here has a tendency of giving us multiple entries here, as we have structures like the 1965, 1960 and the 1945 area to be broken to add more position to our existing trade. So this is what we shall be looking at to sell the XAUUSD for today. Now, talking of buying the XAUUSD, I want to see price action take out all the sell positions at the 1985 level to give us that leverage to be able to buy the XAUUSD. So I want to see price take out that structure, and then we see buy pressure giving us a clue that buyers are becoming stronger on this area, respecting that bullish trend line. Then we could feel comfortable buying the XAUUSD at that point. So we could have a buy stop order just above the 1985 so that we can catch that move when it finally happens. So that is that on the XAUUSD for today. If you have questions, feel free to drop your inquiries in the comment section. Now I will be moving on to the last pair for today, which is the CADJPY. And on the CADJPY yesterday, hold on a second, price dropped significantly. And well, let's look at this critically well and look at what we have here. So since the beginning of this week, we saw how price has been bullish, and I told you yesterday, I think at the beginning of the week, that we shall be using this bullish trend line as our yardstick for trading activity. And one thing I stated here is that the bullish trend line being our yardstick for trading activity, if price remains above the trend line, we'll feel comfortable in our buy position, and the sight of buying pressure above that level definitely will be welcoming opportunities to add more position to our buy trade. However, if price action ever breaks down that structure, it will be an opportunity to sell the CADJPY. And during the New York session yesterday, almost towards the end of the New York session, we saw the breakdown retest of the $96.60 area, and I hope you are part of that position as price action moved. Let's see how many pips that is. Price action moved about 120 pips before this bullish momentum began here. So for those who are part of the sell position here, well done to you for being on standby to catch that move. And going into the New York session today, I'm still going to be holding on to a bullish bias on this one. As you all know, price action is currently sitting on a very big, strong, fat demand zone. And what do I mean by that? If you look at the 4 hours time frame here, you will see how that area, hold on, okay, I think on the daily time frame will be better so that we can see it clearly here. So on the daily time frame, remember we identified this demand zone which sits just right along that bullish trend line that we identified on the weekly time frame on the CADJPY. If I zoom out a little bit, you will see the bullish trend line we identified here which if we go to as far back as the year 2020, you see we have a bullish trend line figured out here, and we have that demand zone just right around that area. So what I told you here is that as long as price remain above that demand zone, we want to be buying around that area. Now, with the situation of things on the 1 hour time frame, price action trading just above that bullish trend line, above that demand zone, we want to be looking out for buying opportunity. And how do we want to catch this bullish momentum if it happens? Scale down to a much lower time frame like the 1 hour time frame, and we have the $96 level as a yardstick for trading activity for today. So what this simply means is that we want to be buying the CADJPY at the breakout retest of the 96.00 level. So with a visual representation, I want to be seeing something like this. Price continuing to the upside, and if it breaks out of the bearish trend line that has been guiding the sell pressure since the beginning of this month, then we want to be thinking of adding more position to our existing trade. Then a further breakout of the 97.300 level will be welcoming additional buy position on this one. And for those who are thinking of selling the CADJPY for today, I will be telling you that it is a no as long as price remains above this demand zone. We cannot be thinking of selling at this particular point in time. We need price action to take out the $95.00 level, and then selling pressure below the structure before we can be considering a selling opportunity in this market. So let's see how price action plays out above the $96.00 level. You could have your buy stop order right there, and then look out for more confirmation in the form of a retest of that structure to add more position to our existing trade. So that is that on the CADJPY for today. And on this note, I want to be calling it a day. And for the sake of those who are not part of the beginning of this live session, let's run through and do a quick recap of what we talked about today. So the first commodity we looked at today is the US oil, and remember we are still in a buy position on the US oil, and I told us all to move our stop loss accordingly to secure this current buy position in that regard. And one thing I also stated here is that we are beginning to witness some selling pressure around the $71.00 level, and what this simply means is that we might likely be seeing a sell-off in this market. And considering the fact that price is trading just right around the resistance line of that descending channel we identified on the daily and 4 hours time frame, we might likely see price drop to the downside. So we had this reversal pattern figured out. The first touch, price came back, price was unable to break the previous high, and if price action breaks down the $70 area, we want to be looking out for selling opportunities below that structure. And for buying opportunity here, we will not be looking forward to buying opportunity unless price action breaks out, retest the $71 level to add more position to our existing trade. And if you had missed out on the buy position we have been enjoying since the beginning of the week, a breakout retest of the $71 level should be a good opportunity to buy at this point. For me personally, I'm thinking that price will drop further to the downside, so a breakdown of the $70 level should be welcoming a sell position in that regard. Then we went on to talk about the US tech for today, as we saw price action do a final breakdown of that bullish trend line, which happens to be the key line that we are using to guide trading activity for this week. So we had a breakdown of both the trend line and the 12,675 level, and you all know what we look out for from a technical standpoint. A breakdown of structure is likely going to see a retracement into structure in anticipation of another wave of bearish momentum to the downside. And to support this and anticipate this expectation, we already have a potential sell window around our area where we said we want to see price action come into structure, give us a reversal pattern on our lower time frame, then we can join that decline to the downside. So we are more bearish on the US tech for today. And one thing I stated here also is that what happens if price does not go that far into the sell window and instead it continues to drop to the downside? Well, we don't want to miss out on that opportunity as well. So we scaled down to a much lower time frame, like the 50 minutes time frame, connected a series of higher lows of this retracement phase here, had this bullish trend line figured out, and we said a breakdown of the bullish trend line here, which also shares a confluence with a 12,675, will be welcoming sell position in this market, and followed by selling pressure will be giving us further confirmation of a valid bearish move to the downside. Then a further breakdown of the 12,620 will be welcoming additional position to this trade. Then we went on to talk about the GBPUSD for today, and on the GBPUSD, we have been bullish in the last 24 hours after enjoying some sell momentums and at the same time some buy momentum here. But one thing we noticed here today is the presence of sellers at around the 1.23450, as we have candles that has the high chance of giving us a sell pressure in this market. And as a result of this, I told us all that we should be anticipating a selling opportunity had the breakdown retest of the 1.22850, which also shares a confluence with that bullish trend line. If this happens, we want to be selling the GBPUSD for today. However, if price action takes out the 1.23450 level and we start seeing buy pressure above that area, then definitely we want to be adding more position to our existing trade. And for those who are still in the buy position on the GBPUSD, I told us all to move our stop loss, secure this current position, as there is a high chance that a sell momentum could come in anytime soon. Then we went on to talk about the XAUUSD, and on the XAUUSD here, hold on a second. Okay, this is where we are. I told us all that we are within a strong sell window between the 1,985 and the 1,976, which, if you see what has been happening here since the beginning of the week, this area has been a strong selling niche for participants in this market. And with this bullish move we enjoyed here yesterday, price action is back into that sell window. And if you look at the last 4 candles, we have been seeing sharp rejection of that area, further giving us a clue of the presence of sellers in this market. Hence, we have a sell stop order below the 1,976 with the hopes that we want to be continuing the bearish momentum to the downside. And we told you that this current structure has a tendency of giving us multiple entries, as we have structures at the 1,965, 1,960 and the 1,945, where a breakdown retest of the structures will be welcoming additional position to our sell trade. So this is what we shall be looking at to sell the XAUUSD. However, if a breakout of the 1,985 happens, we have a buy stop order above that structure. We want to be joining that bullish momentum to the upside, as a breakout of that structure will definitely have taken out all the sell positions here to give us a platform for bullish momentum in this market. So I hope that we'll be on standby to catch either of this opportunity when they finally happen. Then we went on to close the day with the CADJPY, where I said we shall be looking out for buying opportunity on the CADJPY. No sell expectations here, more of a buy opportunity as long as price break out of the 96.00 level. And we have tendencies of adding more positions at the breakout of structures like the 96.450 and the 97.730 area going into the New York session. So we are not thinking of setting the CADJPY here at all, as long as price remain above that strong demand zone that we identified on the daily time frame. To sell the CADJPY, we need price action to take out the 95.00 level, selling pressure below that structure to join that decline to the downside. But if we look at the current structure in the market here, it doesn't seem that will happen. As you can see, since the beginning of the week, we saw the first rejection of the 95. Price was unable to break the previous low here, giving us a higher low. And from a technical standpoint, whenever you identify a higher low like this, it is a sign that buying momentum is gradually unfolding behind the scenes in the market. Hence, we want to position ourselves in such a way that we can catch this move when it finally happens. So I have told us all, above the 96.00 level seems most appropriate to join a bullish momentum to the upside on the CADJPY. So this is my view here on the CADJPY, and on this note, I want to be calling it a day here on the Extreme Speed Live. I hope you are able to get one or two things to help you make your individual and independent decision during the New York session today. And I hope you also screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. So it has been a wonderful moment with you guys today, and I hope to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here to review and look at how well the pairs that we have been monitoring has been doing so far, and at the same time prepare ourselves for the last trading day for the week. Do have a wonderful evening, everyone. Bye bye.